Interest rates at 10%?
Interest rates go up.
Well, the Fed just raised rates by 0.5%. We knew this was coming, guys. We knew it. I spoke about it, weeks and months ago when they announced that they were going to have their meeting, and we are at that date. So what happened with the Fed? Well, they went ahead and raised it 0.5%. I said that was going to be the minimum that they were going to raise it by, and that's exactly what they did. I was hoping that they would go a little bit more aggressive with it by, to fight inflation, maybe going up to that 0.75%, but they played it safe at 0.5% like we knew that they would. So what is it really looking like, and where does the double-digit interest rates come into effect? Well, we're going to go into the data here, but let's jump right into it right here. It says Fed raises rates by 0.5% of a point, the biggest hike in 2 decades to fight inflation. 2 decades, guys. The Federal Reserve on Wednesday raised the benchmark interest rate by 0.5 point, the most aggressive step yet in the fight against a 40-year high in inflation. Inflation is too high, and we understand that the hardship it is causing, they're moving to bring it back down. The Fed chairman also said that during the news conference, which he opened with an unusual direct address to American people, he noted the burden of inflation on lower income people, saying that we are strongly committed to restoring price stability. Now, what is the chairman talking about here? The Fed chairman? Well, he's saying that these high gas prices, you going to the grocery store, anything you're trying to repair in your homes, those things are higher and higher and higher because of inflation. And he's saying that individuals who are living paycheck to paycheck, and if you know what that looks like, that is about 63% of people, of Americans, are living paycheck to paycheck. Now, that doesn't necessarily mean that the individual is quote unquote poor, but he's saying that he wants to really focus on individuals that are poor, and he knows that it's creating a hardship on them. But here's the thing. I believe that they're not being aggressive enough. They have to increase interest rates higher than what they did. Now, they call this being aggressive, but I don't think that it's aggressive enough to bring down inflation, and bring down inflation to a point where it's quote unquote normal, right? Wednesday's rate hike will push the federal funds rate to a range from 0.75% to 1%. And the current market pricing has the rate raising to 2.75 to 3% by year's end. Now, if you look at that, guys, you see that we went from like 0.75 to 1. And if they continue on this 0.5 point increase, it looks like we'll have 4 more increases at that 0.5%. Now, why do I continue to say it will only be at that 0.5%? It is because based on the chairman's comments of him saying that he's trying to attack it aggressively, that means that he thinks this is the top of the line as far as how much they're going to raise it by. So I think he's going to continue to go at 0.5, and he's not going to do anything higher than that, which I think is a big mistake. But how does this affect the housing market, guys? Well, here is how it affects the housing market. Interest rates are going to go crazy. They are, guys. That's just the simple math. But let's look at what rates were and what rates got to and where rates will be. Okay, so let's just do estimates here. A 3% area, and then when we got a 0.25 increase from the Fed, it shot up all the way to 7%. So what's the difference between that? Well, that's 4%. I'm just going to be generous here, and let's just say that it's going to increase another 4%, surely because he doubled the increase, right? Double, right? Really should be 8, but we're not going to go crazy, right? We're not going to go nuts, right? We're just going to say it's going to increase another 4% because he did a 0.5% increase. Well, that puts interest rates at 11%. 11%, guys. But I'm going to even be a little bit more forgiving, right? I'm just going to say, let's just drop it down to a 10, guys. Let's just drop interest rates to a 10 and say that there's just going to be some goodwill in there and not just double up on numbers, and let's shave it down. 10%. Who can afford a home at 10%, guys? You know what 10% looks like? 10% looks like you being able to afford a $200,000 home and it going all the way to $70,000 based on a 3 to 10% range. That's the big difference between affordability and being able to purchase a home through a bank using a mortgage. It's not going to be possible for most people. And what do we have when that happens? People will just decide, you know what? I'm out of the mortgage game right now because this is crazy. I'm just going to rent until this comes back down. I'm not going to do this craziness. And then you're going to have sellers who's going to say, you know what? I don't want to sell my house only to buy a new house to pay 10%. And then you're going to have people in the refinance game that are going to say, you know what? I don't want to refinance either. I just don't want to refinance because the interest rate is so high that why would I refinance a 3% to get into a 10%? That makes no sense. That makes no sense at all. Actually, I'm going to pull $50,000 out only to pay $3,000 more on my current mortgage. Does that make any sense, right? That doesn't make sense. So we're going to see all sectors of the housing market get hit. We're going to have buyers, sellers, and people who are currently homeowners in the refinancing sector, right? No one's going to touch anything when it comes to mortgages because it's going to be super high. Oh, I know. We forgot a sector, guys. We forgot one sector. We forgot the sector where people take arms. And they're going to take arms because it's at 10%. They're going to say to themselves, you know what? 10% is regular conventional, and then 6 to 7% is an arm. And they're going to take it. They are going to take it because they're going to say, I want my home and I'll do anything to get my home. And they're going to take the 6 to 7% arm. And then what's going to happen, guys? We've talked about this. Boom. We have a recession, and a recession brings down the housing market. And then those same people that got arms will go into a really bad time, just like in 2007, 2008, where you go upside down, values of homes go down, and we can go on and on and on. At the end of the day, guys, at the end of the day, what am I saying? I'm just saying it's going to get bad. It's going to get bad with these increases, but we have no choice but to continue to increase these rates because inflation will continue to destroy the economy.
It's a collapsing economy.
It just will. We have to get rid of it. We do not want to be Venezuela, where you have 26% inflation and it continues to creep and the economy shuts down. Our money is worth nothing. We don't want that. We don't want that. So we're going to increase interest rates, guys. And that just means bad news for the housing market. We already see the mortgage industry laying off people. We already see other companies, Bose and all that other people cutting, getting rid of employees and whatnot. It's going to continue to happen, guys. It will continue to get worse before it gets better. Hopefully you got value out of this content. Once again, guys, this information is to give you the research you need to make the best decision for yourself that you possibly can. This is not a doom and gloom. It's just to let you know, in my opinion, this is exactly what's going to happen. And then you just take it from there. I'm gonna need you to watch this video here. It will help you find out what's going on in this crazy housing market. Also get into your first rental. Also check in the description. I have memberships in there, free credit reports, stuff like that. Check it out, guys. See you in the next one. Thanks.